Hey, welcome to the channel. My name is George.
My name is Franco, and we're gonna be streaming our trading every day.
Live in front of the camera.
See how that goes. I want to start with some like pre-market routine that we do, and I personally like a lot of to forecast the direction for the day. That's obviously not 100% accurate, but it can give you a clue of what the market can or may do during the day. And basically what we do is that we see correlations between assets, like different currencies, government bonds, and the VIX, what stocks are doing. We have a little watch list, and we get to conclusions depending on what those assets are doing. So basically today I'm gonna put here my the analysis that I did earlier today. I don't know if you guys can see it. You can see it, George?
Yeah.
All right. So we can see that the dollar is holding mostly against the euro. The euro is going down against the dollar, right? So it's a weak currency today, and then we have also the yen being very bullish, and as we know, the yen and the dollar are by definition safe havens assets. So if those two are going up, means that investors are trying to protect their money. Another clue that we have that investors are trying to protect money is CL. Crude oil typically is a very risky asset and is dropping today around 3%. It was dropping a little bit more, like a 4.5%, but right now it's like -3%. So then we continue, we can see how the VIX is basically flat, and it has some supply up above, so it's not going up like freely. It's encountering a lot of supply. Then we can see how metals are dropping, which is not very coherent with that the rest of the market is doing. But there's a lot of factors in metals, like seasonalities and supply and demand issues, right? That can make metals drop in any given day, and the dollar drop also, right? Then on the watch list, I can notice like stocks are pretty much flat. We have like 126 companies that we watch every day, and most of the watch list is flat. We have this airline Spirit dropping hard. Probably there's some sort of news. Can you check that, George? If there's any news for Spirit Airlines, they were waiting for a merge with Southwest, I guess. I don't know if we have any news with that.
Spirit Airlines rejects JetBlue bid.
Oh, there you go. That's why.
Sticks with the Frontier deal.
There we go. That's why it's dropping. So it's not something about the overall market that is, you know, influencing. Now we're off. So today I am leaning a little bit to the short side because of you know, the overall trend for the latest weeks. But that doesn't mean we only will be shorting. We can find opportunities on both sides. So let's see what the market, you know, presents, and we'll try our best here. Now that the market is open, we can see the AD. I since we trade mostly NQ instead of the ADD, which is the NYSE advancing decline line. I like to see the Nasdaq advanced decline difference line, and that is called a DQD. And right now is around 0. The tick opened up slightly negative, and now it's hovering around 0 also. So, and we can see how the market it went up in the first minute, now is still the same place. These blue dotted lines, I don't know if you guys can see it, is the overnight high and low. And here, these two lines, like gold lines or yellow lines, dashed lines, are the ATR extensions for the day. I'll go over that later during the session, but for now we can, you know, see how the market is just doing nothing, just opened up and is feeling a lot of orders there. Remember, the first half hour or the first hour is critical because the majority of the orders come into the market. And most of the time highs, the high of the day or the low of the day is created during the first hour. So we need to pay attention to what the market does on this first hour. Right now it's creating a range between 12,890 and 12,837. So if it keeps trading in this range, we just have nothing to do. We need to wait till it breaks to one side or the other. What I can notice is that the NQ, the Nasdaq, is not the weakest of the equity markets today. I can see how the Dow is a lot weaker than the other three. So we might have a better opportunity going long in NQ than going short. But it's yet to see what is going to happen. So I like to put these timers like every 40 minutes, 30 minutes, just to keep my psychology in check, to see how am I trading, if I'm, you know, analyzing correctly. And every time this timer goes off, I can pause for like a few seconds and give it a thought. Okay, I'm doing the right thing. I'm doing the wrong thing. Am I off the market or not? Am I, you know, sync with the market? because you'll notice how important it is to keep yourself in check every time you trade. Because trading is a very sensitive discipline. Like, if you're not in your best emotional state, you can screw it up easily. So, yeah, I can see how the NQ and like all of them were dropping right now. The RQY, which is a small cap index, is holding right there. While the other three, the ES, the YM, and the NQ are still dropping. Are you recording this? Nice.
Yes, sir. We got your brother on as well. Beto joins us from Madrid.
No, we're not streaming.
See,
we're
yeah,
recording.
we're not streaming today.
It's just a recording. We're gonna post it later.
Well, we should be streaming tomorrow.
Yeah,
but
today is our first day.
Yeah. Trading Futures Live. I even found tradingfutureslive.com.
Oh, really?
Yeah.
Bye.
We did. I did.
Yeah.
Yeah. Ya tengo una página de web y todo. Vete al website.
¿Cómo es?
Tradingfutureslive.com.
Now, we can see how ADQD did not break the zero line and then suddenly started to drop from there, and the tick is the same. So what is happening is that aggressive traders are selling this market.
Mira, está el pillo la página. Watch us live.
Yep. Yeah, that'll be a link to the. It goes there. It goes to the channel, pero.
Nice.
No hay nada y todavía.
We broke the overnight low. This is a very sensitive point, so we might have a turnaround there, because every time we break overnight high or low, traders come to the market, because it's a very important point during the day. So I can see how NQ became equally weak with the other ones, right? Still, YM is the weakest, but I will try to find opportunities here, and I might have one here. I might have one opportunity here. Yes. So the way I like to trade is very, particular, because I like to see how the price come back to my point. You guys can notice this, okay? Okay, I do have an extreme in the fatigue right now. Is new high extreme, and how much is the risk for this zone? Is 95 to 10, $300. I'm gonna try to do a short here. The location is not the best one, and I can see how the 7-minute is going very bullish. So I'm gonna skip this first setup, and I'm gonna try to short the market here, 34,250. That's barely $400, and my maximum risk today is $337. So I need to go up here, right? I need to go up and try to risk
Order submitted.
that. The way I do it is
Order canceled.
put orders here. There we go.
Order submitted.
$315. I think that will be enough for me, right? And then I'm from running this pivot, yes, for a couple points, and my wiggle room gives me enough space for me to keep, the position, right? So what type of setup is this? This is a trader reaction, because right now, even though the market is dropping, it's not very aggressive to the short side, so we might have a turnaround. And I don't want to be overly aggressive if I'm not clear what the market might do. So what I'm going to do is this. I'm going to
Order submitted.
this. All right. I'm gonna go for more or less like a 2.5, 3 to 1.
Order submitted.
Right? And I'll do it this way. This is just 2, this is 3. Yeah, I think I'll aim for a 3 to 1. Right? So price is going up. It's not going up, but it's holding right there. Then the ADD is basically flat. Now, price is going sharply up, and my tick chart tells me,
Order fell.
all right, we're in this trade, and we might be stopped out, but we're trying to find a place where we can short. So the way this works is, okay, we find location, right? Is a good location. Do we have sellers there? Do we have the momentum in our side? And this might work or might not work, right?
Stop fell.
Now we're stopped out. Not very good for the channel because it's the first trade. But the price is aggressively going up, right? Now ADD is changing, right? ADQD is changing. Is something wrong with that trade? I don't think it was anything wrong with that trade. Location was good. ADQD was good. The tick chart was good. So it's just that we might have a change in momentum. Like I said, we broke the overnight low, right? And that is a very sensitive point that attracts a lot of traders. And now they're trading to the long side. Now I wanna say that I'm trading a funded account, right? And this is a real money trading live. George, can you check if we have any sort of news why the market is shutting up so, sharply?
Order filled.
It moved 1% in, I would say, 4 minutes.
We have manufacturing PMI coming out right now at 9:45 in 1 minute or less than 1 minute.
Yeah, that's one thing that weighed in.
The CAD manufacturing PMI came out at 9:30, and it was below expectation.
Order filled. Order filled.
So we have the report out, right? How did it came?
News is out and it's a little below forecast.
Yeah. Remember, this manufacturer PMI means if it's above 50, we have some growth. If growth, if it's below 50, then we have some contraction. So the goal for this month was 59.7. We have 59.2. It's not bad. We still have growing going on. That means we might have more inflation. Oh, we still have reports coming out in. We have ISM manufacturer PMI at 10. So we might have this sideways market. Volatility is very, very impressive these days. Right now the VIX is going up. It's at 34.55, but for one that is accustomed to see the VIX around like 20 or between 15 and 20, which is acceptable volatility. Being at 35 is very, very, very aggressive. And we can see that. Like, look, this candle was 947, and it's 70 points below. That was in barely 1.5 minutes. We can talk about ATR and average ATR, right? So you can see how the market moved and by a certain period of time with the ATR. and ATR stands for average to true range, and it gives you the average of any given time frame, how much in average move, or what's the range of the candle in that time frame. If the ATR of a 5-minute chart is I don't know, let's say 25 points, that means in average the 5-minute chart is gonna move 25 points. So we use a lot of ATRs here. Because remember, this is a probability game, and the average movement for different time frames give us, clue of what the market can do, right? And in a certain period of time. So I keep marking zones, but I would rather wait for the S&P Emini that comes out at 10, because that's gonna shake the market. With the VIX at 35, even though the market is flat, the VIX is going up. That means there is higher uncertainty today. Market is flat, markets are green, right? But the VIX is up. That's not very usual. The way it works is if the market drops, then people get uncertain. But the market dropped last week very sharply. We closed the worst month in 14 years for the NQ. So we didn't have such a negative, month since 2008. So no wonder why people are concerning and VIX is going up. VIX is going up even though the market is flat. Now when the market drops, is very hard to capitalize on the movements, because the farther it drops, the cheaper it gets. So more buyers come in, right? So in every bear market, I'm not gonna say this is a bear market yet, but in every bear market, you have buyers entering, thinking, all right, this is cheap enough, right? So that creates this type of spikes, right? It went cheap, a lot of buyers came in, but it's just to see if the buyers are powerful enough to, turn around the market, right? So that's why shorting is so difficult, because especially in Nasdaq, you could have these pullbacks that are brutal. And that happens because the market gets, to a certain point where traders think, all right, this is cheap for me to buy, and they buy, and then create this spike, right? But then they run out of fuel, right? They run out of fuel, and sellers coming in, and then happens what is happening right now. It's just hovering around there because sellers are selling. If the buyers are strong enough, then we'll have a continuation to the upside. But for now, we have to wait. It's not a good sign that the market goes up and the VIX goes up along with the market. That doesn't happen very often. So what I can notice right now is that the small caps is the strongest one. None of them has broke the overnight high. So we're basically trading in a range. It's a huge range, but nevertheless, it's a range. And it's a huge range because we have a lot of volatility. A lot of volatility can means also less liquidity and more slippage. I will teach you guys about slippage in this channel later. And I need to confess this. I'm better at shorting, and I can get very comfortable going long. But that's one thing that I need to get good at. Like, and what I do and what I like to do is on my on trades that I miss. I like to go back and see, oh, I missed it. What happens? What happened there that I didn't take that trade? And revisit that and try to, get better. Now we're about to break the overnight high. Remember, that's a very sensitive point. We can have another turnaround after this. Alright, news comes out in 1.5 minutes. Let's see what happens. We didn't break the overnight high here. None of the market did. And the close, like small caps and Q were the ones trying to break it. And the report that comes out is we gotta see, we gotta be aware that one report is coming out. Not necessarily because we wanna see what the number is, or if it's a good or bad news. We just wanna see when the volatility is gonna spike, right? Because ultimately the chart is gonna speak before the number. So the chart is going to move before you get to see what the number is. So we don't really care about what the number says. Is alright, the numbers could say good news or bad news. We're interested in what the market is doing. There you go. I want to trade this. I really want to trade this. So I need to trade this. We're gonna see how. What do you think about the long?
I was leaning long when it broke out of the opening range there to the long side, but
Order
I don't see much follow through.
Order canceled.
Yeah, it didn't break the overnight high.
Yeah. And the
regardless.
chicken ADD, the ADD is on the slow incline, but certainly no follow through, and the tick charts are very mixed. No clear direction on the tick chart yet.
No.
Order submitted.
That being said, at the moment I'm still leaning long.
Order canceled.
Yeah, I think I wanna see the tick chart going to an extreme, and I will take a trade over reaction around 868. Long. There's a lot of volume in this 3-minute candle there. Well, I do why I broke the overnight high for just one tick. Now, here's the thing. I'm seeing a very bearish pattern in the 3-minute, right? Now on the 7-minute, still look neutral. But I want to see if I'm trading long, I want everything pointing up. And it might work, it might not, but psychologically I feel more confident when everything is going in my direction. So what I mean is I need to see this 3-minute candle close, right? Neutral, so I can have a retracement and engage long, right? If it closed like where it is right now, would be ideal. There's 1 more minute for this one to close. And this thing that I do with a 3 minute, 7 minute. I got a bunch of charts opened up, right? I just can record these too. But the multiple time frame analysis is one thing that I would say is vital for my trading. I need to see different charts because I'm looking for clues. I'm looking for, you know, little signs that enhance my trading.
Still not getting any follow through to the upside, and bearish pattern on that 3 minute is.
It is. I mean,
winning the battle right now.
mm-hmm.
Getting an extreme tick to the downside.
Yeah.
And the ADD seems to be rolling over.
There's my zone right there, but I wasn't sure because of the ADD. If the ADD gives me a flat candle, I'll put the order on.
Dollar starting to go up. The VIX is pushing up hard right now.
Yeah, the VIX pushing up hard is not good for the market to go up. Because it's not only a self-fulfilling action, right? It's because literally people are buying puts, because the VIX is an index that comes out of the amount of puts being bought in the CBOE, in the Chicago Board of Trade, right? So if you buy puts, it's because you're trying to protect your positions, right? But the fact that you're buying a put means that your broker needs to sell the asset to hedge their position against your put, right? So that might be also a self-fulfilling action for the market to drop. The VIX is going up, but the VIX goes up because a lot of people are buying puts. This zone is not a good location. It's nothing fancy, but it has a lot of risk and reward ratio. The risk is very little.
And this is just a tradable reaction.
It will be. I'm not sure if I'm gonna take it yet. I need to see a very extreme tick. Like I've told you guys, I'm very comfortable shorting, right? So every time I'm gonna long, I need to go back and recheck these zones more than once.
I do like that it was created around the open.
What?
Your zone.
942.
But the tick and ADD is certainly.
If I see a new tick extreme, like a very new fresh tick extreme, I might take it. As a matter of fact, I'm gonna put the order now. I'm gonna put this bracket that I use just in case, and I'm gonna go exclusively for a 2-to-1. if I see a new fresh tick low, I might go get the tradable reaction. But for now, it's not showing me. Yeah. And now I have, well, the 7-minute can be a, yeah. The 7-minute can actually turn around. There are 2 more minutes to go. Now, the zone was dodged, right? And we have some sort of reaction there, probably 1-to-1. And for tradable reaction, you gotta be very aggressive. After 1-to-1, we move the stop to break even. If I have a ticket stream, if I have a tick stream read, which is not happening right now, I will put the order on, even though it's tested. There you go. That was going to be a good trade. That was a 2-to-1. But I think the thing is this. Here's the thing. You have to have it. You have to have a plan. If the plan says the ticks has to be extreme, then you have to stick with it because supposedly you test it, right? So that's the way we trade. If you had a rule, if you have a rule, it's because it works, right? And if it works, that means it works the majority of the times. It doesn't work every time, right? I could have taken this trade, would have made back my whatever I lost in my first trade, but that's not the case for the law of large numbers. You gotta stick with your rules if you want to make money in this business. And my alarm for the 37 minutes that I put went off, and every time that goes off, I just talk to myself. I see what I did. I get conscious of it, and I evaluate myself to see if I am in good shape to keep trading.
To his point about following the rules, we even had a conversation over the weekend about taking quality trades over quantity trades.
Yeah.
We're not here to take every trade. We're here to take the best trades.
Yes. And since the market is very wishy-washy today, it hasn't gone anywhere. It barely broke the overnight low and shut up, and then it didn't break the overnight high, and now it's dropping. Right? It's going nowhere. It's in a large range. Every time, like I said, like the overall trend right now is down. That's undeniable. For every time it goes lower, more buyers sees attraction to the market. They see that the market is getting cheaper, right? So even though the trend is down, you might have a lot of buyers coming in, right? So you got to be careful with shorting at these lows. Now the big picture, when I say big picture, but a bigger picture of this 3-minute, 1-minute, whatever. The 30-minute is just pure sideways.
Bond yields are up. The VIX is up.
Now I have this, right? This zone. There's no follow through yet, right? Because it's just forming. But between 31 and 56 can be a nice shorting opportunity if we have a drop from here, right? I want to see these candles not getting back to the zone. All right, now, so now is invalidating, right? For shorting right now, I want to see a large drop from here, a long drop. And if it drops from here, then when it comes back up, we can short from there, right? Right now, it's not doing anything. Like, it's just staying inside the zone. And what happens with the VIX? What happens with the ADQD? What happens with the tick? So the ADQD went up sharply. Now it's retracing back to like 50% range. It's hovering around zero. It's not negative. It's not positive. It's just right there. We don't have a real trend yet. And the tick is also mixed. Like, I would dare to say half of the time is on the positive side, half of the time is on the negative side.
This week we also have quite a bit of news. On Wednesday we have the federal funds rate as well as some unemployment news, but the big news on the week is going to be the expected 50 basis points increase in the federal funds rate. That'll be Wednesday at 2 p.m. and then on Friday we also have non-farm payroll, which is always a big news event as well. So
the market usually behave very sideways days before the Federal Reserve meeting. So what is going on today is not very atypical, right?
yeah.
Okay, I have a zone there that's being filled. If I have a new fresh tick extreme, I will put my order, but it's not going to. Like, obviously there are sellers there, but I want to see a fresh new extreme if I want to trade this to the short side. There you go.
Order submitted.
Alright, I have a new order there. It went through the zone. There's no point for me to trade
Order
this.
canceled.
The ES is also broken out of its opening range. That made a new high. Not on the day, but just on the range since the open.
Yeah.
The ticks definitely made a new extreme high.
Order filled.
The ADD seems to be rolling back over to the upside.
Order submitted. Order canceled. Order submitted.
Incoming.
Those are new extreme highs on the tick. And a lot of volume in those candles.
Order filled.
The ES is testing its overnight high. We made new very extreme highs on the tick.
Yeah. We haven't broken the overnight high though.
New 30 and 45 seconds.
Looks like he's breaking the high in a very solid manner. We have ADD, we have the tick supporting all the movement.
Order filled.
So for now, I just have an order there. It's gonna take some time to come back to that point. Probably it won't come back today. So I have another zone at 904, 12,904. Let's see how it comes back, if it comes back ever. But for now, I don't have anything very clear. Like, we might have a bullish day today. There's no real supply. There's some supply here. I would say around 135, 13,135. Now, what I can tell is that the way is going up can easily be, brought down, because there's nothing created on the way up. There's no clear demands that I would say, oh, I want to take this.
Order filled. Order submitted. Order canceled.
I'm waiting to see if I can take this long at 971 for a travel reaction. That means maximum I'm gonna take 2 to 1. I want to get greedy with this trade, but what I need to see is the tick making new lows. What do you got, George?
I don't have much. It's a very, very indecisive day.
Well, we were expecting something of a sort, right?
Yes.
With this week, the sort of news that we had, sort of news. 17 seconds for the 3-minute close, and then we'll have a neutral candle.
Order filled. Order filled.
Second alarm goes off. How am I doing? How do I feel? I'll put this order to go
Order
short.
submitted.
This is a very fairly low risk, and what I need is a tick to come up to at least the zero line where I'm going getting filled. Now the ADQD is it made such a sort of like a reversal pattern here, a double top, and it's starting to roll over to the downside. I do not want to see this trade getting filled in the next 3 minutes. I mean, it needs to get filled before like the next 2 or 3 minutes, so I can have the time for it to drop, because the 7 minute is very bearish, and if I get filled in when the 7-minute is closing is not a good sign, right? Because it will be a very bullish pattern by the time. So probably the next minute, see how it goes. Now I can see how the NQ is the weaker market amongst the 4 equity market. NQ is the weakest right now. Then we have Amazon and Apple dropping. I mean negative. Amazon minus 2% and Apple is minus 1%. That's dragging the NQ to the downside. Remember, this is a weighted index. It's not equally weighted like the YM. Remember, we are in a Fed week and within the earnings season. So there's a lot of volatility to be expected this week. We have 5 more minutes of this 30-minute candle to close, and we will have some retracement to the upside in the next candle, so we can short this. Alright, it looks like it's coming to my short. Let's see how this goes. Alright, take is getting to an extreme. This is fairly low risk for my usual position size. You came very close to my zone, like, well, 8 points.
Order filled.
Right, 20 seconds, 21 seconds for this 30-minute. And I do have a better confirmation that my zone will be a nice trade. Now I have a long right there from 904 to 883. I will only take it if the tick chart makes me a new low, a fresh low. I wouldn't do it if it doesn't make a fresh low. Why? Because I want to see a lot of stops being triggered. How do I see that? Extreme lows in tick. What does that mean? That the extreme lows in the tick is that the majority of the trades are being triggered market, and where sellers are selling on the lows, the majority of the time this stops being triggered is not like a smart seller.
Order
That's called
filled.
an undisciplined seller. Those undisciplined sellers might be stops being triggered. So if I see that undisciplined seller selling at, at the bottom, then I will think, all right, so this is the point where the buyers are gonna turn the price to the upside.
Order canceled. Order submitted.
All right. Now that we're coming back down to the a 0% retracement, if you will, I'm gonna take this limit, even though the tick chart and
Order submitted.
yes, so this will be my limit entry. And I'm aiming here. From here.
Order submitted. Order filled.
Let's say more like 30.
Order submitted.
In reality, I want to go like 7, 6. So this goes. So I'm ready to go long, George. It looks pretty hard, but if you see, we might have a chance. Like the ADD is still in a like bullish environment, is positive. And the other thing with my zone is that it's wide, it's very wide, and I just can't take. I might do this. Yeah.
Order submitted.
Yeah, how much is my risk today?
Order
So
submitted.
my balance account right now is
Order filled.
what's my balance account right now? 2250 minus 300 is 22,180. So it's 330. There you go. So we've been in this recording for how long, George?
Now, an hour and 43 minutes.
An hour and 43 minutes. We're not gonna try to make it, and we're gonna try to keep it like below 2 hours so you guys can watch everything. But today is our first recording. We're not even streaming, so we will get better with time.
Very much a learning experience today.
All right, let's comment about the reports that came out today, right? Manufacturing PMI, ISM manufacturing PMI, is an ISM purchasing managers index. So that means they survey 400 managers from companies, and we get this index. So what is baked in this index is new orders, backlogs, new export orders, imports, production suppliers, deliveries, inventories, customer inventories, employment, and prices. So for my interpretation here is that the purchasing managers index is it's fairly, it was well below the estimate, right? Um, it came at 55.4 and the estimate was 57.6. So what I'm gonna do is this. Let's get better at reading this thing. How do you do that? You start it. So I'm gonna check out this book, right? And see what this thing says about S&P Emini while we wait for our trades. So
Order filled. Order canceled.
Alright, the ISM PMI index is a diffusion index. So for ISM manufacturing report, the break-even point for diffusion indexes is 50. Value above 50 indicates that the manufacturing sector is growing, where reading below 50 represents contraction, negative growth for this sector, right? So what we can see here is that the result for today was 55.4. That means we have some growth there, right? So we gotta understand this index comes from 5 main points of the survey, right? New orders, production, employment, supplier deliveries, and inventories. Even though it was below the forecast, still it is showing that we're growing, that the economy is growing. Alright, we have there our trade, and we're about to get filled in. Let's see what the ADD is not very good, but the chart is actually very good. It showed a extreme. So we might treat this as a tradable reaction, right? See how this goes. There's sort of like a sell-off going on. Alright. We are 1-to-1 right now. Well, barely 1-to-1. No. So we need to be at something like 14 and something. There we go. Now we're 1-to-1. Since it's a tradable reaction, the direction is against us. We go to break even. So for now, it's a break even trade, right? There's a sensitive point here in the orange line because we have this huge pivot. Can be, trigger our break even. But it is what it is, guys. You need to trade this the most process-based, right? You cannot improvise, because if you improvise, you can have a little bit of intuition in every trade, but that cannot drive your trading, right? And right now, things look very bearish. Like I was bearish here, but yeah, we didn't got a trigger there for a break even. We might get triggered. If we get triggered, it's fine. We won't take this zone again. We just wait for the next opportunity. And guess what? It might not be today. It might be tomorrow. So for now, we're in this trade. Barely. We moved 1-to-1, so we moved our stop so we don't get a full -1R if we lose. We just will be at break even.
Stop filled.
Yes, and we've got stopped out break even, right? The zone is still valid, but we will not take it again. We will not take it again. It's a super wide zone, and sadly, because it's very wide, we cannot risk the whole zone, right? So I had to adjust my entry, so I can still have the same invalidation point. And the invalidation point is no more than where the trade gets invalidated, right? So where the trade gets invalidated in 1817, right? So right now we were triggered out, right? We're not in this trade anymore, right? But the zone is still holding. So and what happens is, since the zone was so wide, I could not risk the entire zone. This still might work, right? Because it's a high quality area where I trade from. But since our risk management conditions, we had to adjust our entry and our stop, right? And guess what? This will happen, and it'll happen for several times before we can increase the account balance to the point that we can risk the entire zone, right? And be comfortable, be comfortable and and adjust our risk parameters, accordingly to the account balance. As of right now, we need to adjust. We need to trade a small account. Even though I'm trading a funded account, we need to have management rules. Any comments?
I'm just curious on your context of the market now.
Let's reevaluate it from the beginning. So the VIX is still going up. That's not a good sign to go long, right? Crude oil is going back up. Not much. It's minus 2% still. Metals still dropping, and the dollar is going up, right? Yen, what is the yen doing? So the yen is barely sideways right now, and the bonds have started to drop. So going long is not a crazy thing. We don't have a risk-off day per se. We have a very, very, very mixed day. Here's the thing, guys. Risk on means risky assets are being bought. Risk off means risky assets are being sold, right? And what are not a risky asset, right? By definition, certain currencies, right, like the dollar and the yen, and fixed income is not a risky asset, right? Meaning U.S. government bonds are a risk, quote-unquote, risk-free asset, right? There's always a risk, but it's the less risky financial instrument that you can buy, right? Because there's very little risk of default, right? So there's one thing from that side, right? Risky assets are being bought or not. And the second thing is, all right, we have a problem with valuations because that risk-free rate right now is going up so sharply that that the market has to adjust valuation, and that is what has been happening the last few weeks. So the 10-year yield right now is getting to a critical point of 3%. It's a very psychological number. We haven't had a 3% yield since, and I will tell you, November 2018, right? 4 years ago. So the market are adapted to this sort of like a risk, like a low rate environment, right? Low rate environment is disappearing. Right now, rates are going up sharply, fast. So the market usually adjusts to that sort of movement, right? Valuation has to come down, so the risk-free rate. Because what happens is this. Why I talk about risk-free rate, and this is more like a fundamental. This is more like a fundamental side of trading, right? That got nothing to do with our trading, but it's good to have this information in mind, right? So what happens is this: if you have $100,000, right? You want to put the $100,000 where? In a risk-free asset or something that has some risk. But how much risk, right? So people usually don't know, and they choose to go to a risk-free asset, and they go and buy the 10-year bond, 10-year U.S. government bond, right? That's paying right now 3%, right? But if I tell that investor, look, how much do I have to pay you, right? In percentage-wise, how much do I have to pay you so you bring your money to a more risky asset, meaning a stock, Bitcoin, currency, you name it, right? So that difference is the willingness of the investor to put their money in a more risk asset, right? All right. So if 3% pays me something that it really has no risk, I might not get less than, or I might not ask less than 10% for a risk asset, right? Because I can get 3% without risk, right? So people tend to fly out stocks when the risk-free asset is going, the risk-free rate is going up, because they take some risk off the table and put it on a risk-free asset. That means they sell stocks and they put it into bonds, right? So that is the caveat of bonds going up or down, right? Usually risk off day is bonds, yen, and dollar all in tandem going up, right? And the opposite is right also, like bonds, dollar, and yen going down. That's a super risk on day. But not every day are like those. Like we have a mix today, and the market is going nowhere. Is went up, it went down, but it hasn't really going nowhere. Like it has moved because the volatility is so high that you can have these wide range, right? That are good for our trading. This is good for us, right? VIX 34 is awesome for us, right? But it hasn't gone nowhere yet. It might not go anywhere today. We can have a flat day. So that was a very short lecture about it.
Thank you. with that being said, guys, I think we're going to be calling it a day. We do trade live here. Franco is actually down on the day, right?
Mhm.
You're down 2R, 1R?
1 hour.
1R, so one loser and one break even.
Mhm.
And that's what we're here to do, guys. Trade live in front of you. Show you our winners and our losers. Not just our winners, not just our good days.
Mhm.
Hopefully you guys learned a little something, and we will be back
Tomorrow.
Thanks again.
Bye.